Alright, what's up traders? This is Taylor Horton with your free video for Tuesday, May 10th. Before we jump in, guys, I want to invite each of you to come on over and check out the free trading room. I know a lot of you watch these videos, a lot of you leave nice comments saying you appreciate the content and the analysis. So if you're not a part of any of our trading rooms, come on over and check out the free trading room. I'm in there 3 to 4 times per week. We got Sam Shames, Danielle Shea, you got Allison, you got Henry Gamble. We got the whole squad in there. So I'll make sure we put the link in the description, and I'll be in there tomorrow afternoon. If you want to come on by and check out a few setups together. But I do got one setup I want to share with you tonight, and it's going to be this weekly squeeze here in Apple that I think is gearing up to fire to the downside. So if you compare the weekly chart of Apple to, say, you know, the weekly chart of some of its peers, like an Amazon, like a Facebook, like a Netflix, like a Google, Apple certainly does hold up a lot better here. But here's my thinking. If we pull up a chart of the S&P 500, this has its own weekly squeeze, which as of this week is now firing to the downside. So remember, the rule of thumb with the squeeze is that once the squeeze fires, we're looking for 5 to 8 bars of momentum. So given it's a weekly chart, there's a potential here for 5 to 8 weeks of some pretty steady momentum to the downside. So should that be the case and that weekly squeeze works as advertised, I don't think the Big Apple here is going to buck that trend. And then in terms of Apple's own structure, we have bearish, weekly, 3-day, daily, and 4-hour squeezes. So my thinking is, so long as Apple is trading under that 21 EMA, I want to short a pop here, looking for a flush down into 2ATR on the weekly chart, which lines up with about 145, 140. So there's my target to the downside. But the key and the thing I want to stress is, don't get me wrong, we're in a market where, you know, things are pretty vulnerable here. So this could be a market where getting short at minus 2ATR could be a profitable idea. I think in terms of developing habits that are going to serve us well over the duration of our trading career, let's not develop the habit of getting short at 2ATR. So I've got the squeezes, I got the structure, I've got my sell signals. The only thing missing here is a better entry. So what I would like to do is get a big enough of a bounce here in Apple to try to snag this June 17th expiration put debit spread. So I'll show you guys the put debit spread I'm looking for. And then I'll show you ideally the price I'd like to get it at. Alright, so June 17th expiration, I'm going to want to go with the 165, 145 put debit spread. So, at the moment, that bad boy is going for about $9. What I would like to do here, guys, is pick it up for about $6.50. Here's why. If we right-click and hit Analyze Trade, let's pull this trade here into the Analyze tab. Let's see. Get rid of that. Alright, so we can pick it up for about $650. Let's look at the risk reward into the first week of June. So my target to the downside, which I mentioned, is about 145, 140. So down at 145, 140 into early June. On one contract, we're going to be up about we'll be up about $850 to $1,000. So call it $900 to $1,000 of profit. My exit here will be a close right around 165. So into June 17th, up at 165, we are risking about $200 per contract to potentially make about $800 to $1,000 per contract on the flush into our target. That's only if we can get that debit spread for about $6.50. So what do we need here to get it for $6.50? We're going to need a pretty good bounce here in Apple, probably up into 160 plus. So what do we need to see throughout the overall market to get that bounce in Apple? We're going to need to see a short squeeze. And in terms of getting a short squeeze here, you know, we could turn that into a 30-minute long video, probably a little bit longer. But a few things you want to focus on, just a few basics. One, we have to take out yesterday's high. If we can't trade above yesterday's high in that daily 8 EMA, we're not going to get a short squeeze here. So a few technical levels to focus on, but then I think you also want to watch the volatility index. As long as the VIX is kind of coiled up here, catching its breath above that daily AEMA, it could be resting, could be gearing up for that push into 40. Now, if the VIX can break that AEMA and begin to fade, there's a green light for the market to squeeze the shorts. So, if we can get a big fade in the VIX, if we can see the S&P 500, the QQQ, trading through Monday's high and the daily AEMA, I think we got the green light here for a bit of a short squeeze, and what I would look to do with that short squeeze is short the bounces in setups like Apple. So I got a few more that I can show you guys in the free trading room. I'll be in there tomorrow, so again, go on ahead and sign up. Come on and swing by. But otherwise, guys, I hope you find this helpful. Hope you are staying safe and profitable in this market. And if you haven't already, go on ahead and hit the like and subscribe button, and we'll catch you in the next video. Talk to y'all soon.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.